Alrighty. Alrighty. Getting ready to get started. Let's go there. Let's go there. Let's go over this way. There we go. Live, 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 live everywhere. Good evening, everyone. All right. Let's get the ball rolling. Oh, wait a second. What are we looking at here? Is that not working? Video capture device. Let's toss that. Let's get rid of it. Let's do another video capture device. There we have it. Outstanding. Who do we have tonight? Ooh, let's start from the beginning. Let's start from the beginning. Here we go. Marcin, how we doing? Fladanka, Robocaller, Max, Big Ten Ben, Gio, Oliver, Castillo, Frank Real, Z to Z. Okay. G. Della, Reed, Jill Ann Bruner, how are you today? Nice here tonight. You like that? Thank you. Secretariat, how are you doing? Landon, C Money, what's happening? NC Scratches, okay. KG, what's happening? Doctor, Chief Parrish, Cool Beans, Junior, Michael, Joseph. Today was my first day, a little overwhelming at first. Hey, just take your time. It's not going anywhere. Okay, no hurry. Dave, user, Job, Laurel, Shane, Forex, Biggs, Reed, Thirsty, 1, 2, 1, 3. Testing, 1, 2, 1, 3. Block 96, Robert, Cool Beans, hello, hello. Dashal, how are you? Susie Q, Jamie, TJ. All right, that's enough for now. This is James. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks, take you guys along for the ride. Hello, hola, bonjour, allo, salut, konnichiwa, bajast, a whole bunch of things. Hi, how you doing? Wonderful, wonderful. Charisma, how are you? That was cool. Like that. That was nice of you. Thank you, thank you. TJ, Amgen, ooh, SDVY, SDVY. I could ask you the same thing. Why? SDVY. Why the hell are you putting your money into that? Now that's okay. You know what? If it's okay for you, and if you're okay with this, fine. It's at the high of the year. Something I don't do. I don't buy at the high of the year. I'm not sure I'm happy with both Kohl's and Macy's this evening, regardless of their premiums. Secretariat, you and I have had this conversation a few times. All right, I don't blame you. BBY, let me write BBY down. Hold up. Hold the phone. BBY. It is Monday. We're starting up a new list. BBY. All right, we'll take a look at that one. Amgen. TJ, you actually got to give me the ticker symbol for that. CEO, Kohl's. Kohl's CEO. I'm not sure I'm happy with both. Kohl's CEO announced stepping down this evening. Okay, why are you unhappy about that? I mean, is there a reason? I mean, why did he step down? BBC. What the heck is BBC? BBC. Dingo. What the heck is Dingo? DINGO. And Clove. CLOV. What about Coney? Hell no to Coney. Siri Maxwell? Coney? No. The reason I say no to Coney, it's a monthly, that much I do know. The numbers just don't work out. Tojay, what's happening? Giuseppe, Eduardo, ¿qué pasa, amigo? ¿Cómo está? All right. M had a rogue employee who basically cooked the books, just a little, over the past 2 or 3 years. Oh, wonderful. Don't you just love hearing that kind of stuff? AMGN, I did a trade for 1% this week and was wondering your thoughts on the company. AMGN. Savannah, how are you? AMGN. We'll take a gander at it. Ooh, thank you for that, sweetie. Sweetie swag. Woohoo. All right. Uh-oh. Why were you in a pilot's outfit? Well, tonight was my grandson. He's 4 years old. It was his very first plane ride in a private jet. So we bought him an outfit, and we figured Papa G gonna wear one too. So me and my grandson were both wearing a captain's pilot outfit. So we got a bunch of pictures taken, showed some videos. So I'm gonna take a nice couple of those pictures and frame them and put them up on the wall. Can you say Skibidi? Yeah, no. Love you very much, so. Thank you, Savannah. All right, that being said, Sweetie Swag, that's why. Me and my grandson were going for a plane ride on a private jet, and I figured for his very first plane ride, I'm gonna put him in a pilot's outfit. We got to sit in the cockpit with the pilot and talk to the pilot, and I actually shot video of my grandson in the cockpit with the pilot. It was cool. He had a blast. Okay, Rose. Rose is lit up. Dividend Stock Talks Gift Gallery. Anyone who sends the gift will contribute 150% Live Fest points to the live creator. Okay, cool. Nuki just released. I have no idea what Nuki is. N-U-K-I. Never heard of it. A-M. Tyrese, what's happening? A-M. What the heck is that? Andrea, James. Hi, James. Like your plane ride with your grandson. Andrea, it was fun. Savannah. Then can you say, happy birthday, Myra? It's my little cousin's birthday, and none of her friends came to. Oh, that's horrible, Myra. I'm terribly sorry nobody came to your birthday party. Happy birthday, Myra. Hey, Sweetie Swag, cool beans. Glad you like it. So what dividend stocks do you recommend? MXW, I don't recommend anything. Okay? Seriously, don't recommend anything. I make no suggestions, no recommendations, no tips. I just look at. She said, thank you so much. Yay for me. Cool beans. All right, so, yeah, MXW, I don't make any I subbed, yeah. I don't make any suggestions, no tips, no tricks, nothing like that. I just take a look at what you guys want me to take a look at. Every once in a while, I'll tell you what I'm doing. But I cater to you what you guys want me to look at. And I put it through my... what do you call it? My strategy. My strategy is pretty simple. It was created for a 9-year-old. Hold a thought while you guys are new here. Here we go.
Hi, I'm JC, and you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
Do you see how long ago this was recorded? 12 years ago? Wow, oh, look at this. Live now, right here. Dividend Stock Talks live. Cool beans, that's me. Cool beans, that's me. Hey, hi, ho. Hey, hi, ho. That's funny. That's funny. Let's get out of here. Hold on a second. How the hell do I get out of here? Let's get out of here. Hold on a second. How the hell do I get out of here? Get out of here. Hold on a second. How the hell do I get out of here? That is funny.
Hi, I'm JC, and
Okay, so as I was saying, this trading strategy was created for my daughter. That's her right there.
there are 5 keys. Key number 1, there are 156 companies paying over 10% yield this year.
Yep. That's my daughter. When she was 9, she asked me, Daddy, can you teach me how to trade like you're doing? So here's the thing. It has to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. So I came up with 5 rules. The 5 rules are pretty simple. Seriously, they are. Rule number 1, do not buy something you do not understand or you do not want to hold on to. If you can't picture yourself buying it and holding it for a long period of time, don't buy it. Because you just might have to hold on to a stock longer than you want to. Me, personally, I want to buy it on a Monday and have it sold by a Friday. I do a covered call. It is a simple, safe, predictable strategy. I buy a stock, I sell it to someone else for the same price I paid for it, and I get a transaction fee, also known as a premium, through what is called a covered call strategy. And very little to no risk, especially when I refuse. Rule number 2, never sell at a loss. Rule 1, never buy something you don't understand. Rule 2, never sell at a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. If it doesn't have weekly options, no thank you. If it doesn't have dividends, no thank you. 20 years of increased dividends, no thank you. And then rule number 5, make sure the numbers work. Now, what do I mean by that? Well, if I'm going to be buying a company, all right, buying some stock in a company, what am I buying it for? What's the current price? This is it right here. Okay, up top you'll find all the information on the stock. This is the opening price, the high of the day, the low of the day, the close of the day, how much it changed, so it went up $8.67 today. What is the bid, what is the ask, and how much volume is there? How many shares traded today? That's the information just on the stock itself. Down here, this information down here is option information, stock options. It allows you to do a lot of interesting creative strategies. The number one strategy that I like, it's called the covered call, where I will buy the stock and then I will sell it to someone else for almost the exact same price that I paid for it, collect a premium right here, and the premium that I'm looking to collect is 1% or more. If it doesn't make 1% or more, no thank you. It's actually that simple. Doesn't meet my criteria, no thank you. Plain, simple, that easy. Okay, let's see what we got here. Jill, Kohl's sold up. Okay, let's take a look at Kohl's. All right, Kohl's. First thing I want to do, always, is check the 1-year chart. How has the stock reacted this year? Well, here's the high right here. That was back in beginning of April. Here's the low. That was a couple of days ago. A year ago, here's where it was. Here's where it is currently. Look at the movement. It went up, sideways, down, and now here, it's just getting ready to turn around and go back up again. I like buying it as it's coming off of the bottom, which is what it's doing right now. That being said, let's take a look. A year ago, $22.78. The top for the year, $29.69. That was the beginning of April. The last 90 days, the last 3 months. Look at the movement. Up, down, up, down, up, down, up, down. Here's the bottom. Now it's going up again. Your highs up here. Look at all this space up here. That looks good to me. I like it. So, last 30 days. Here's the last 30 days. Now, the last 30 days, the reason why I look at the last 30 days, it gives me a good idea of where the stock's going next. Well, that's today. We figured out last Thursday was the bottom. Friday was up. Today's up. Well, great. At this moment in time, it's at 1830. What does it normally do this time of year? For that, we look at the seasonality chart. What is the seasonality chart telling us? Well, here we are right here. Basically, just going to go sideways. No big up movements, no big down movements. If she stays exactly where it is, that's perfect for calls and spreads. Yeah. Covered calls and spreads. Let's move this over. Now, if I was going to do a trade on Coles for tomorrow, I like the 18s. Okay, so currently it's at 1764. The 18s are going for a buck 31. That's crazy. Seriously, that's like 6%. Okay, so let's do it. A covered call on Coles at the 18s. All right, here's what it sounds like. One contract at the market, at the open, first thing in the morning. Here's what it sounds like. Buy one covered call of Coles, 29 November 24. That means the option is going to expire this coming Friday. So whoever buys it has got to figure out what they want to do between now and Friday. The $18 call strike against the coal stock at the market to open. Okay, that's what it sounds like. Now, my break even is 1613. See that right there? So as long as the stock stays above 1613 by this Friday, well, I'll be doing just fine. All right? Now, here's the profit. The maximum profit on this particular trade. Remember where I said I want safe, consistent, simple, safe, consistent, and predictable. Predictable means I want to know what I'm going to make before I even do the trade. Coal sold off 1746 after hours. Okay. Thank you, Andy. So here's my maximum profit. 186.50. What is it going to cost me? 1,600. Well, let's check out the numbers, see what they look like. Now, you do realize these numbers are going to change as soon as the market opens, because that's what happens. As the market opens, as the day progresses, the numbers change over and over and over again. All right, so grab out my calculator. Profit on this particular trade right here, 186.50, 186.50. And what is the trade costing me? 1,614. 1,614. That comes to a grand total of 11.5%. That can't be right. As good as it looks, most likely that's not going to be right. Because when you open up first thing in the morning, let's get out of all this stuff so we can see exactly where we are, what we're doing, where we're going, all the kind of nice, neat, fun stuff. All right, here's the option chain. These are the puts over here. Here's the calls over here. There's a difference between a call option and a put option. Oh, okay, monthly, not weekly. No, weekly, not monthly. Here is what the premiums are. How much am I going to collect? If I buy the stock here at this price here, 1764, the closest strike price is going to be the 1750 or the 18s. Now the 1750 is the safer trade because it's already in the money. The 18, a little bit more profit, but these numbers are all going to change in the morning. So here's the thing. You end up buying at the ask price. Whatever the ask price is, you figure out what is the closest strike price. So I sell the strike price, and that's the premium in which I collect. So you do a little bit of fancy math, and I'll give you what is your rate of return for the week. Andrea, Walgreens and Kohl's had good options today. Yes, they did. I actually did Walgreens and Kohl's this morning. MXW, I have no idea what that means. KG, I was trying to explain the triple play to my wife today. I love a triple play. I do. I think I may have done like 3. In 20 years, I may have done 3 triple plays. Albion, how was the private plane? It was very nice. You know, you'd think, you know what I like best about it? Is I didn't have to buckle my seatbelt, and while the plane is flying, I can get up and walk around. Okay? And I had free access to the fridge. Anyway, let's keep on going. All right, where were we? Where were we? Where were we? Where were we? Yep. Okay. All right. Okay. Did I hear the Macy's think in the news about an employee and 150 million thing? I heard something about it not even 2 seconds ago. Okay, somebody told me there was some creative accounting with Macy's. No, I'd like to find out. Well, we'll find out sooner or later. I don't even know why people do that. Creative accounting. You, you're gonna get caught anyway. Eventually, everyone gets caught. All right, Jasmine. Encourage more viewers to share. Yep. Don't forget to like, share, comment, subscribe, all that kind of nice, neat stuff. Do you scan for unusual option activity? Okay, Steven, it's a great idea. Yes, I don't do it here though. Okay? The reason why I say that is here on this little platform, on this little show, this little segment of my life, I teach one and only one trading strategy. Okay? Reason being, it is simple, it is safe, it is predictable, and the income is consistent. If you do it right, usually there's no way to lose. I can't really say that because if the world opened up and swallowed up, let's say, General Motors and just swallowed up every single General Motors plant, it probably could. I try to share my friends think 9 to 5 financial. Okay, not quite sure. Let me read that again. I didn't get the whole thing. YouTube has a tendency to go really quick. I have to read the whole thing. I try to share my friends think a 9 to 5 is financial freedom. Alrighty then. There's nothing wrong with that whatsoever. We need 9 to 5ers. No matter what you do, always, 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 someone is going to complain. Okay? The way I look at it, if you don't have enough people complaining, you're just not working hard enough. Becca Makawa, how are you today? The Oracle, thanks for joining in. Red Dragon, woohoo, Steve Cook. So Steve, I do scan every once in a while, but not usually. Because here's the thing. When you figure out what you want to do, okay, I have so many things going on in my life, which I'm retired, which I probably shouldn't. I should probably just sit down, relax, and do nothing. But here's the thing. You know, my children are still in their growing phases of their family. My one son has started his family. My other son just got a serious girlfriend. I mean, serious, kind of moved in together, that type thing. And my daughter, same thing. So they're starting their lives, and I'm trying to not be a helicopter parent, you know. Let them do their own thing. When they need me, I go, I'm there. My mother, she's a little bit older, so I have to go take care of her every once in a while. 2 or 3 days a week, I go down and take care of her, and her house needs a lot because the hurricane made a big mess. So I have a lot going on. So yeah, do I scan for unusual option activity? Once in a while I do, but I got to a point where I found a trading strategy that works for me and I am okay with it. Could I make more sitting in front of the computer and just trading all day? Yes, I could. But then you got to ask yourself, how do you want to spend your time? Do you want to spend your time sitting in front of a computer making lots of money? Because of all the things in the world that easy come, easy go, it's money. Money comes, money goes. What doesn't come and go is time with family and friends and relatives. So I took a day off today, took my grandson on his very first private plane ride. Okay, and he had a blast. He did. Freedom is a must. Exactly. I love freedom, and I have almost the amount of freedom that I want. Now, I committed myself to be here with you guys for a whole year. So we're quickly getting to the end of the year. So I've been here every single day since the beginning of January. Okay, I've only missed 5 days. Okay, and I think that's pretty good. I missed 1 day because I was sick as a dog. Just wasn't happening. Second day, I had to take someone to the emergency room because they were sick as a dog, almost like dying type scenario. And then I lost 3 days because, if you do not remember, the hurricane came right over the house. The eye of the hurricane came right over St. Petersburg, and that's where I was. Thank you. Okay, so let's keep on moving forward. Sam wants to take a look at Pepsi. All right, Pepsi, PEP. Whoops, where is Pepsi? PEP. Just to let you know, I usually don't do Pepsi. The reason being is right here. It's currently at 163.05. The 162.50 is going for 118. Not quite there. Now, it doesn't have a 163. It's either 162.50 or the 165. The 165 basically worthless. The 162.50 we're losing a buck 70 right off the top. Yeah, that ain't worth it either. See, Pepsi is an old company. It's been around for a while. They really don't need to have good premiums, and they don't. So I don't think I may have bought Pepsi maybe 2, 3, 4, half a dozen times maximum out of 20 years. Okay, AbbVie, I bought AbbVie more than I bought Pepsi. Lewis, what is that? I have no idea. Okay, Victor, AbbVie, ABBV. I like AbbVie. It's currently at 177.99, so the 178 doesn't have one. The 177.50s, yeah, those numbers don't work. Okay, there's no sense even looking at the chart. Even though the chart looks pretty interesting, there's no point because the numbers, see, you're going to have a week where the numbers look great and the chart looks terrible. You'll have other weeks where the chart looks terrible, but the numbers look great. Every once in a while, you'll have the charts look great and the numbers look great. Well, that ain't this week. Not for Pepsi, not for AbbVie. Andrea, Rude Dude, how are you today? Rude Dude, I got that text you sent me the other day. You're up pretty good. Awesome, good for you. All right, Andrea, CVS. Now, I do have some CVS. Okay, nice move today with CVS. Check that out. Nice. 60 bucks. The 60 is going for 60, so you make your 1% right off the top off of that one. Cool, that works for me. 19 Edwin, how are you today? 1967. Edwin, you're 1 year. Okay, anyway. Victor, they have earnings call tomorrow. Expected to be down. Uh-oh. Okay. Simone, hello, and how are you today? All right, so CVS, the numbers do look good. All right, great. So what does the chart look like? Let's take a look at the chart and see if CVS is a contender for this week. Now, just to let you know, I do have some CVS in one of my accounts. So the high of the year, 82.50. A year ago, we're at right around 70. She shoots up, goes sideways, drops down here, goes, look at this sideways. Nice. Bottom is right here at 52.50 a couple of weeks ago. Okay, she went up, down, sideways, now we're right here. Okay. Last 90 days, the last 3 months, check it out. Up, down, up, down. Up, down, up, down. Now she's going back up again. See where we are right now at 60? Look at your high right over here at 68. So we have lots of space to go up here. So that looks good. That being said, what does CVS normally do this time of year? For that, we need the seasonality chart, which gives us an idea. Ooh, look at that. That's actually not that bad. Look at it. You can't mistake that for anything else. The blue line represents this year. The blue dot, well, that's today. Look at this. From today, she shoots up nicely, a little bit of a pullback mid-December. That's 3 weeks away. And she finishes up the year higher than she is at this moment. So CVS looks pretty damn good. So I'm going to put a nice little check mark next to CVS. Let's get out of that. Let's see what a CVS covered call looks like. Okay, we're going to change this to covered stock, currently at the $60 mark. Here's the 60 strike right there. 59.48. Let's go to buy just one contract. Okay, at the market. And here's what it sounds like. Buy one covered call CVS 100s. That's the weekly, which means it expires every week. 29 November 24. It's going to expire this Friday. The $60 call against the CVS stock at the market to open. That's the order right there. Okay, what does it mean? Well, my break even is 59.39. Well, that's not bad. Anything over 59.39 is going to be a profit. The maximum profit on this one, 61 bucks. That don't look that good. Let's get the calculator out, especially after we looked at a couple of the other ones. $61 is the maximum profit. See it right there? Okay, we want to divide that by the cost of the trade, including commission, $59.39. That's a big chunk for that small amount, and that's only 1%. Okay, well, that's what we're looking for. Okay, number one, it's CVS. There's a CVS in over every major city in the United States. CVS is pushing the last legal drug, you know, prescription crap. J. Cole, how are you today? Okay, so if you like CVS, that's number one. Is it, wait a minute. Question number one is, does it make sense? Question number two, do I like CVS? Then question number three, do I like CVS at this current price? Because there is a slight chance that you will buy CVS or I will buy CVS. It will drop down to a point where it doesn't make sense. Well, that's a possibility. That's a possibility with anything you do. Okay, there's always good and bad. There's always yes and no, yin and yang, hot and cold, clean, dirty, wet, dry. There's always opposites. You know, sometimes you'll buy something, it will go up. Sometimes you'll buy something, it will go down. Okay, it's all in balance. All right, so that's CVS. Let's get out of here. Let's get out of there. Let's get out of there. Let's get back to Heya. And back to Heya. There we go. All right, they have earnings call tomorrow. Tomorrow morning is earnings for Kohl's. Cool beans. Earnings tomorrow. Yep. Listen how... Wow, I missed some. Kohl's tomorrow. Okay, here we are. All right. Trying to read that name. Peridian Animal. Okay, AMD. Isn't that Advanced Micro Divisions? Don't they have like no dividends? AMD, Advanced Micro Division. Whoops. Historical data. Okay, I'm going to go to historical data. There we go. Now we want to look at dividends only. Yeah, AMD. There are no dividends in the time period selected. No. Do you have any licenses? El Jefe. Of course I have licenses. APO. Ethan. APO. What the heck is APO? APO. Ooh, they do have dividends. Check that out. Nice. APO. 22, 24, 20, 46, 25, 24, 40, 105, 57. I'm going to say hell no, dude. Seriously, Ethan? APO, up, down, up, down, up, down? I like consistent profits. A consistent profit means it gets higher and higher every single year. Okay, expect it to go down, Victor. Okay, I don't have a problem with that. Jim, 89,970. Now you're trading options. I thought you bought and sold dividend-paying stocks. Yes, Jim, I do. I buy dividend stocks and I use what is called a covered call to generate a safe, predictable, and consistent 1% per week. That's my goal. Were you the pilot, Jay? No, I was not the pilot. Dingo! Get it early. I have no idea what dingo is. D-I-N-G-O. That's not even a stock. Yes, it's true. Boca Macawa. Okay. Simone, Apache. APA. Okay, so here's Apache. Here's our high. Here's our low. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up, down. Now she's coming back up. 22.75. The 23s are going for 10 cents. Not this week, kiddo. Terribly sorry, Simone. Okay. Peridia Animal. I already said no to AMD. Okay. Advanced Micro Devices. No dividends. No thank you. LCOT is pumping. I have no idea what the heck LCOT is. LCOT. That's a no, dude. Sorry. What about XRP? No. Dogecoin? Nope. Coca-Cola. Victor, Coca-Cola, really? Coca-Cola is going to be a no. Seriously, look where it is. It's at 63.37. I'm sorry, 64.37. The 64 is going for 51. The 65 is going for 8. You're not getting it either way. When will I be teaching the strategy? Well, Fountainful, that's what I'm doing right now. Fountain's full, okay. What do I think about Johnson & Johnson? Hunter, Johnson & Johnson has been in business so long, they don't need anything from us. Okay, currently the price is $155. $155.78. The 155s are going for 63. Okay, that's not even 0.5%. No. How cute is that? He must have loved the plane ride. Just amazing to the little mind. Yeah, it was. He had fun. Hey, Sherry. Sherry, I'm going to give you a buzz after the show, okay? Because we're finalizing our plans for the trip to Vegas. We're thinking this weekend. Not quite sure. Let me know what you think. Mike Miller, inspire me more. How are you today? Mike Miller Jr. I'm trying to balance out the part of my life. I'm 25, but I spend so much time focusing on making money. Okay, Mike Miller Jr. is a perfect time in your life to be concentrating on money. Okay, forget the girls, forget going out, forget having a good time. If you struggle now, if you make your life extremely difficult now, at some point in time, your life is going to be a breeze. Okay? If you want to have fun now, your life is going to be a pain in the ass when you get older. Okay? Suffer now when you're 20, when you're 25. If you spend 5 years putting your nose to the grindstone, saving, investing as much as you possibly can, by the time you're 30, you should be set for the rest of your life. However, you're 25. Try to talk to a 25-year-old, spend absolutely no money, no fun, no excitement, no nothing. And then at age 30, you should have enough to last you for the rest of your life, and then life will be so much easier. Becca Makawa. Yeah, we had I did a couple of videos with my grandson on the plane. He had fun. Major Laser. James, do you ever get an urge to introduce a meme coin and do a rug pull? All right. 2 things on that, Major Laser. Number 1, I have no idea what a rug pull is. Number 2, I have no idea what a meme coin is. Number 3, so I have 3 things. Number 3, if it ain't a dividend stock, I'm not interested. Mike Miller Jr. No, we are working on real careers and hobbies here. All right, Mike Miller, you asked me some opinion. Jessica Angelina invites you to co-host. Well, cool beans. Well, I appreciate that, Jessica, but I don't know you. And I have no idea what you want to talk about. Okay? So, I'm going to say no. No, we are working on real careers and hobbies here. Okay, whatever. Whatever you want to do. Mike Laser, that's a no. Brian, check out X. Ooh, I like X. U.S. Steel. Gotta love some U.S. Steel. Look at that. Here's the high. Here's the low. That's where it was. That's where it is. Look at it. She goes, big jump up, big drop down, sideways. Got a bottom right there. Okay, so the high of the year, 39.72. That was in December last year. The bottom was the beginning of September, and that was 35.44. But look at the trading range right here. Just kind of went sideways. Isn't that cool? Just going sideways. Look, up, down, up, down, up, down, up, down, up, down. Imagine how many times you could have made money off of that. Now, don't get me wrong. I did buy US Steel a couple of times this year. So let's take a gander last 90 days. Take a look at this. Okay. Down, up, down, up, down, up, down, up. Now she's coming back down again. Bummer. Let's zoom into that. Look at the last 30 days, because the last 30 days gives us a good idea what we can expect the next week or two. All right. Sideways, up. Here's your high for the 30 days. Here's your low for the 30 days. Comes back up. Now she's coming to the downside. I like US Steel. I do, but not this week. Okay, maybe next week, because as you see it coming down here, she doesn't have much further to go down here before it might be a good time to jump in. Now, 38.61, we'll be looking at the 39s, it's giving over 2%. Well, I like 2%. Unfortunately, she's coming down. But it has a nice premium now, so when she gets down here, it turns around, maybe she'll have another nice premium, and maybe that'll be a good idea. The real Sam I am. I am Sam. Sam I am. Do you like green eggs and ham? That's Sam I am. That's Sam I am. I do not like that Sam I am. Do you like green eggs and ham? Would you like to eat them here or there? I do not like green eggs and ham. I will not eat them, Sam I am. I will not eat them here. I will not eat them there. I will not eat them anywhere. You can tell I have kids and grandkids. I just like know that shit off the top of my head. Anyway, Brian, sorry about that US Steel. I do like US Steel, and I am going to put US Steel on the list for next week, because as this thing drops this week, because we got Tuesday, Wednesday, Thursday, Friday. Okay, by Friday, this thing should be down here and ready to turn around, go back up again for next week. So I'm going to write it down for next week, US Steel, and we'll take a peek at it next week, see what happened. Verizon, KG, thank you for that. Brian, okay, we already did that one. User 527289626378484726839993. What the hell were your parents smoking when they named you? Seriously, that's a weird ass name. Verizon, VZ, huh? VZ, here we go. Interesting. I'm going to say no. Wasn't that quick? No. Okay, here's the last 30 days. Look, up, down, up, down, up. Where do you think it's going next? I personally do not ever buy at the high. I don't care if they're promising me the moon. Okay, this is the part where I want to be selling, not buying. But that's me. You guys got to figure out what's right for you. The real Sam I am, puff, puff. I have no idea what that means. Hood, Robin Hood, not 20 years old yet. Sorry, MC. Yeah, I believe it has been. I believe it is. But you're missing one important factor, okay? Robin Hood has not been around for 20 years. There's no possible way they could have 20 years of increased profits if they're not even 20 years old yet. All right. Miss Marie, FedEx. How are you doing, Miss? FDX, FedEx. FedEx is going to be a no, kiddo. Look at where it is. Okay? It's at a high. I do not like buying it high. Now that is a nice run up. Look. She went up, down, up, down, up, down. Now she's going up again. All right? At some point, there will be profit taking. When that profit taking kicks in, I don't want to be anywhere in sight. I want to buy it here or here. Not up here. All right. FDX. CVS. Andrea, we already did CVS today. Take it real quick. CVS. There you go. Take a look. Okay, here's the high. Here's the bottom right there. Look, it's in a nice little run up right there. Your 30-day highs here. 30-day bottom. Let's zoom into that real quick. Okay. 30 days ago. Down, up, down, up. Now, there's plenty of room here, and there's still plenty of room here. Okay, it is in an upward trend, and it will stay in an upward trend until it's done going up. That's all there is to it. I have them at 52. Well, that's awesome. Inspire me more. When the end of the year comes around, will you keep your recorded videos up? Yes, they will stay up. I am basically going to continue doing nightly, but not every single night. Okay? Now, this whole year, I have not gone out for dinner once at night. I have not gone out dancing. I have not gone on a cruise. I have not gone anywhere. Okay? I committed one whole year to be here with you guys every single night. Even on vacation, I took you guys with me. Sup, Austin? DHR. What the heck is DHR? DHR. What the hell is that? Okay, it has weekly options. It's in a good place. Dan Hara. Okay, well, let's say DHR. DHR. How often do they increase their dividends? Okay. 23, 22, 21, 19, 18, 17, 16, 15. Oh, come on. 2011, which means they've been around for 14 years, 13 years. That's it, 13 years. Okay, so it goes from 1 to 2 to 2. So 3 years with no increase. That's not a good sign. Okay, 2011, 2 cents. 2012, 2 cents. 2013, 12 cents. 3 years, no increases. That's a no right there. I want consistent increases. That means 1 year, and then higher the next, higher the next, higher the next. Not 3 years, the exact same dividend. So it goes from 2 to 7 to 9 to 11 to 12 to 14 to 15 to 16 to 19, 22, 24, 27. Okay, but still not 20 years. I like the numbers, but not enough of them. Alrighty, so let's get out of that one. How do you feel about the mining sector as a whole right now? Okay, Boobly, how do I feel about mining sector? I don't categorize my stocks by sectors. I categorize my stocks, and this is not easy for some people to wrap their head around. Okay? If you take a look at all these little green dots here, they all represent a company that is ready to pay a dividend. Okay? Now, BAC, Bank of America. Well, they're a bank. They deal with money. Baxter, they're an electric company. They deal with electronics and electricity. eBay, well, we all know what eBay is. It's an online auction. General Motors, they do cars. KHC, they do Heinz 57 sauce, the Heinz ketchup, so on and so forth. Coca-Cola, Pepsi, Waste Management. So there's two that are similar, Coca-Cola and Pepsi. But look at the other ones. Trash, a car, ketchup, online auctions, electricity, and a bank. However, every single one of those companies are paying their dividend on the exact same day. They're not separated by sectors. I do not separate by sectors. I do exactly by the calendar and when they pay their dividend. Because the dividend is a precursor, what do you call it? A lighthouse, an indicator, whatever, something to grab your attention, say, hey, look at me here. Okay, this is what I'm paying the dividend. Buy me 2 weeks before this date, and the stock will go up in value. Well, great. By knowing when the stock goes up in value, what trading strategy are you going to use? Well, for my 9-year-old daughter, it had to be simple, safe, predictable, and consistent. So that was the covered call. You buy a stock, you sell it to someone else, you gain more than 1% every single week. More than 1% every single week is over 50% per year. Okay, now they're all good companies. I've heard of every single one of these. Bank of America, Baxter Electric, eBay, General Motors, Heinz Ketchup, Coca-Cola, Pepsi, and Waste Management. I heard of every single one of those. I have no problem buying any one of those companies. Okay, that being said, let's move on. All right, next question. All right, Dusty. Hope you are all doing well. Got to get kiddos to bed later. Thanks again, James. You're awesome. Dusty, thank you for that. Anyway, next, Booby. Tech been booming for a while. Do you think mining will follow? Okay, Booby, I don't isolate my companies. Joshua, how you doing? I don't isolate my companies by sectors. Only by when they pay in the dividend. See what you got. All right, Booby. Is that right? Booby, yeah, Boobly. All right, Boobly. Boobly. I would like you to get out of this is number one, is I don't pick stocks by any industry. My main focus is, are they consistently profitable? That's it. Consistently profitable and have weekly options. That's the only two. I don't care if they do gasoline. I don't care if they do oil. I don't care if they do banking. I don't care if they make band-aids. I don't care if they make toothpaste. I don't care what they do. As long as they are consistently profitable and they have weekly options. Now, we checked on Sunday. Sunday, we checked, there are 9,743 companies. Okay? Do I really care what they all do? No, I do not. My main concern, are they consistently profitable? That's my main concern. Okay? It's like, if I'm going to be investing my money, I want to give my money to someone who knows what they're doing and have been doing it for a while. It's kind of like, here's an idea. Let's say hypothetically you own a company and you're going to hire someone. Someone comes in and he or she's in their 40s or 50s, okay? And they've been doing, let's say, baking bread or making donuts, okay? They've been making donuts or making bread for 30 years. Then you have a high school student, just graduated high school, and they want to come and make donuts with you. And they've been doing it a couple of weeks with their grandma. Both making bread, both making donuts. One of them has decades of experience. The other one, not so much. Where do you want to put your faith? Where do you want to put your money? I want to put my money with a company that is consistently profitable. It is that plain and simple. I'm not going to give my money to someone who doesn't know how to run. I shouldn't be saying that, doesn't know how to run a business. Of course they know how to run a business. They're running a business. But if they're not consistently profitable, something ain't right. So for me, it's a no. Anyone? Yep, Booby. All right. Uh-oh. Oh boy, it's always one. All right, hold on. Where was I? Wow. I missed a lot of questions. Holy shit, DHR. Okay, we already did DHR. Okay, got that question. Mr. Clean Squared, Shat, Wrap, you are selling. No idea what that means. You're looking for 1% returns, risking roughly 5,500. What? Okay, dude, you're definitely not understanding it. Fire, how you doing? So user whatever. I'm looking for a 1% return, risking 500. Okay, see, you're not listening. What snake oils? Boy, I'm not listening to that one either. I mean, if you want to hold CVS, sure. But like you said, you don't want to get caught in a sunk cost fallacy. I have no idea what a sunk cost fallacy is. None whatsoever. User whatever. Already looked at Verizon. Okay, it's a no for this week. Ken, curious, what cost Spy to rip at the open this morning? No idea. I don't pay attention to that one, so no concern of mine. Fire. 1% return, then keep in the bank? No, hell no. I don't put my money in the bank. What do you think about AMD right now? I don't do companies that don't have dividends. Okay? AMD, Advanced Micro Devices, no dividends, no thank you. Canman, Realty, seriously? No weekly options, no thank you. Don't pay dividends, he won't comment on it. Thank you very much. That's a no. Thoughts on realty income? Canman, listen closely. Realty. Okay? No. Plain and simple. No. No weekly options? No, thank you. No consistency with their dividends? No, thank you. What about ET, Energy Transfer? I don't like the premiums on Energy Transfer. Hold that thought while we verify that I'm human. There we go. Jesse, QYLD. Oh my God, it's a big floating turd. QYLD. No. Okay, hold on a second. Canman, O Realty. You ready? O Realty. Monthly options. No, thank you. Okay? No to monthly options. Monthly options just don't work. QYLD. Oh, imagine that. Monthly options. No thanks. It just doesn't work. What about ET, Energy Transfer? ET, Energy Transfer. Now, Energy Transfer, a couple of things. Number one, it's at the high of the year. No, I don't buy at the high of the year. Number two, look at 2 strikes out of the money. At the money right now is 19. The 19 is paying between 14 and 24. 1 strike out of the money, the 19.50, 2 cents. Not worth it. After that, 1 and then 0. The premiums on that are horrible on ET. Davy. DNA. What the heck is DNA? DNA. Dingo Fireworks. No. Again, monthly options, no thank you. I don't do monthly options. The numbers just don't work. Your covered call, always at the money, never slightly out of the money. All right, Bandit, it's always, always, always going to be a mathematical problem. Okay, let me find an interesting one. Dell. Okay, take a gander at Dell. Dell at this current moment in time is at 144. Okay, the 144 is going for $7. That looks nice. Now look, 1 strike out of the money, the 145, $6, still nice. 2 strikes out of the money, 146, $5.55, still nice. 147, 4 strikes out of the money, $5.25, still awesome. 6 strikes out of the money, $4.85, awesome, still. 149, 7 strikes out of the money, $4.35. Okay, certain companies pay awesome premiums and certain ones don't. Energy Transfer, no. Okay, Brian, you're absolutely right. O is a no. It is. What is Vanguard's equivalence SCHD? QILD. I don't like either one of them. Seriously, Tom and Jesse, check out the numbers. When I see the numbers, I'm not just talking about these numbers here. I'm talking about go to Yahoo Finance, go to Google Finance, whatever finance website you want to use. O Realty, okay, they've been paying dividends all the way back until 2011. That's not 20 years. Then take a look at the dividends they've paid. Okay, 2011, 14. 2012, 14. Was that the same? 14, 2011, 14, 2012? They didn't increase at all. That's a no. All right, 2013, 14, 15, 18. Look how long was it at 18? Okay, 2013, 18. 2014, 18. 2015, 18. That's 3 years. 3 years, no increase. All right, but wait, it gets worse. It does. Okay, so let's forget the dividends because they're not doing it there. Let's go to the summary page. The summary page will tell you, flying fuck. Okay, Realty Income Corporation, $57.45. Well, here's the chart for today. Interesting. Look at this right here. Forward and dividend. $3.16 a share for the dividend. Okay, great. 5.5% yield. What does that mean? Well, that means you put your money into O Realty and you get a 5.5% rate of return. 5% rate of return for the year. Not a week, not a month, not a quarter, a whole year. Why would you think that O Realty paying 5.5% is a good investment? Tom, SCHD. SCHD. SCHD is paying 3.46% per year. Why the hell would you think 3.4% is good? Jesse, QYLD. I think that's worse. QYLD. Okay, so QYLD, oh, it's paying 11%. All right, well, that's better. Okay, but still, I don't like it. The numbers just don't work for me. QYLD doesn't have 20 years of increased dividends. Neither does Coney, neither does O, neither does SCHD. Black-Eyed Joe, what's happening? Ford, huh? You want to take a look at Ford? Okay, here's Ford. Ford had a nice little update today. Here's the was. Here's where it is. Look at that channel right there. That looks sweet. A year ago, we are sitting at 10.30. The high of the year was 14.85, and that was in the middle of July. A couple of weeks later, okay, the beginning of August, there's our bottom at $10. But look at from here. She just kind of goes sideways. Take a look at that. Okay? Up, down, up, down, up, down, up, down. Now she's going to the upside. Okay, great. Do you like Ford? Do you like Ford at this price? Does that chart tell you something? Does it tell you anything? Okay, here's the bottom here. Now she's going up. Okay, fine. Do you like Ford? Do you want to hold on to it? MMEX. Michael Bohe. Okay, MMEX. Never heard of it. MMEX. Hell no. What the hell is that? ET good for dividends? I don't like ET because the premiums are horrible. LMT, Lockheed Martin, LMT. Interesting. Now, let's take a look at Lockheed Martin for a second, because this is interesting. What happened today? Well, first thing we want to see, the high of the year, 619. The bottom of the year, 412. We're currently at 521. The 520s are going for 270 to 590. Might get you 1% out of that one, but you sure ain't going to get it out of the next one. Look at the next one. No, not even. Because at 521.70, the 520s is the closest one you're looking at. Well, if I buy it at 521.70, I'm losing $1.70 off the top. You take $1.70 off of that, that's a hell no. No, sorry. Lockheed Martin's a no. DLI, what the heck is DLI? Nope. That's a no also. Eli Lilly. Okay, Eli Lilly is also out of my price range. Okay, it's currently at 753. The 753. Okay, giving you the 1%. Okay, even the premiums down here are pretty good. Okay, so the high of the year for Eli Lilly is 973. The bottom of the year, last December, 561. So she shoots up, pulls back, up, down, up, down. Now she's bouncing off right here. Look at the last 90 days. Last 90 days. Down, up, down, up, down, up, down. Big drop, up, down, up, down. Now she's bouncing off of there. 755. Apparently she's at 753. Now I don't like that at all. The last trade was 755. The current bid 745. The current ask 753. The market maker is going to push this one down. So that's not looking good at all. Okay, seasonality for Eli Lilly. What does it normally do? Flat, nothing, nothing, no up, no down, just flat. If you like Eli Lilly, it's a little out of my price range, but okay. All right, user 5272, whatever. Why do they have, hold on, using your system, I'm up 19% in the last 10 weeks. 10 weeks. 10 weeks at 19%? That's almost 2% a week. That's pretty damn good. Good for you. All right. Why do they have to be dividend paying stocks to consider them for a 1% return? Well, that's a good question. Are you ready? First and foremost, I think I said this, I say it every night, and you're relatively new here, so you probably haven't heard it, okay? Now, first and foremost, the trading strategy I am teaching you right here, right now, was specifically created for my 9-year-old daughter. When she jumped on my lap in 2008 and said, Daddy, can you please teach me what you're doing? So, here's the thing. I have a 9-year-old little girl who wants to learn how to trade the stocks. Okay, what happens if she loses? She's going to cry. She's going to make me feel like shit. I don't want that to happen. If that happens, I feel like shit. Mama gets involved because now the baby girl is, crying, Now I'm sleeping on the couch. So, here's the thing. For a 9-year-old to understand this, it has to be simple. It's got to be safe. It's got to be predictable. It's got to be consistent and no way that she can lose. So, 5 rules. Rule number 1. Never buy something you don't understand. If you don't understand it, don't buy it. If you don't want to hold it for the rest of your life, don't buy it. Rule number 2. Never sell at a loss. Okay? Ready? Here's the big one. You ready? This one, a lot of people goes right over their head. Rule number 3. Must be consistently profitable. When I say consistently profitable, I am talking 2 decades of profits. 2 decades, that's 20 years. So you have a choice. You can either read 20 years worth of quarterly reports and annual reports to tell you exactly how the company's doing. Or you could go directly to the dividend and see how consistently they've increased their dividends. Because here's an interesting thing about a dividend. A dividend is the portion of the profits that the company passes along to the investors. Okay? You have 2 kinds of companies. One, they take all the profits, put it back into the company for capital growth. To capital growth. So the stock goes higher, faster. If that's what you're looking for, you're in the wrong place. Not what I'm interested in at all. In my younger days, yes. Now, no. Now, the second half of the companies, they pay a dividend. They share their profits with the stockholders. That is us. When we buy and sell stocks, we are the shareholders. We own a portion of the company. We are entitled to a portion of the profits. So, if the profits continuously increase, well, logic, reason, even common sense will tell you if the profits increase, so do the dividends. So, here you go. If you take a look at the list of the dividend kings, 54 companies that have consistently increased their dividends for 5 decades or more. Okay? Dividend aristocrats. 67 companies that have consistently increased their dividends for 25 years or more. Dividend champions. 150 companies that have consistently increased their dividends for more than 25 years. They have a little different rules than the aristocrats. Now, list number 4, the dividend contenders. 300 companies that have consistently increased their dividends from 10 years to 24 years. Not quite that 25-year period yet, but just before. Now, for the fun of it, I like to throw in Warren Buffett's list. You know what? If it's good enough for Warren, it's good enough for me. So those 5 lists I just gave you will be about 300 companies that have consistently increased their dividends for more than 2 decades, consistent years of consistent increased dividends. Not every once in a while. Not, I'll get to it when I think about it. No, every year, higher and higher dividends. Now, the reason why I like dividend stocks is because stocks move for 2 reasons, and 2 reasons only. Reason number 1 is what we call an unknown reason. What is an unknown reason? Natural disaster, earthquake, fire, hurricane, tsunami, mudslide, something you can't control. Comes out of nowhere. A lawsuit. Remember when Exxon Valdez crashed up in the Northwest and spilled that oil all over the place? Nobody knew that was going to happen. That was an unknown reason. The stock dropped like a rock. Okay? Hey, Orlando, how you doing? British Petroleum, same thing. They started leaking oil in the Gulf. Their stock dropped. Oh, wait a minute, no. 3M had a huge issue at the beginning of the year. Stock dropped. Apple Computer had to pay out, I think, $11 billion in Europe. Their stock dropped. Anytime something happens and the stock drops for an unknown reason, that's an unknown reason. You can't plan for that. So the second is a known reason, a reason we know that is coming up, that we can plan for. So what are some of those reasons that we know are coming up? Earnings reports, dividends, stock splits, seasonality, something we can plan for. A dividend is something you can plan for because every single one of the companies I invest in pays a dividend, and they pay it predictably the same time, year after year after year, quarter after quarter after quarter. So if we know the dividend is coming up, if we know the earnings report is coming up, well, we can adjust our trading accordingly. If the stock goes up every single year, Weight Watchers goes up at the beginning of every single year. Come on, we all know why that is. All right? Now, Hershey stock goes up the first week of February. Why? Well, because you got Valentine's Day, and right after Valentine's Day is Easter, the 2 biggest chocolate days of the year. Hershey stock goes up just before that. Well, you have your oil stocks. They go up a certain time every year. Why? Well, because you can buy oil all year long, but nobody turns on a furnace in June, July, August, September. Okay, you can buy oil June, July, August, September, but you're not going to turn your heater on. Everyone usually turns their heater on around the same time, November, December, January, February. March comes, what happens in March? Your oil tank is low, you need to order more oil. Oil stocks go up in March and April. Okay? Seasonality creates certain, let's call them, certain movements in certain stocks. So, the reason why I like dividend stock, well, couple of reasons. How was the plane ride? Paul, it was very short, but it was fun. My grandson had a blast. Thank you for asking, Paul. What was I saying? I was saying something. Squirrel! Yes, I do have ADD. I admit it. I lose track of what I'm talking about once in a while. I probably should have flashcards. All right, so as I was saying, a few reasons why I like dividend stocks. Here we go. Before the dividends pay, let me go to the calendar so you guys can actually see it better. Okay, here's the calendar. The calendar tells me when the stock's going to pay the dividend. If a stock increases in value, seasonality, thank you there, Orlando. If the stock increases in value just before they pay their dividend, that is a known reason. That is a known effect. So if the stock goes up before the dividend, that tells me to buy the stock before the dividend. That's one of the reasons why I use dividend stocks. Because if it wasn't a dividend stock, then I'd have to read that stupid report. And I have found that earnings reports, I've seen positive earnings where the stocks go down. I've seen negative earnings where the stocks go up. So I don't really pay attention to earnings reports. I like dividends because they're consistent, they're every year. All right? Now, that was two reasons. Third reason, absolute worst case scenario, if and when a stock goes down. It's not a if, it's a when. Okay, let's look at Eli Lilly. Okay, take a look at Eli Lilly. Let's get this all the way over here. All right, take a gander. A year ago, 555. Okay, she went up, and she went up, and then she went up. What happened here? It went down. It's not an if, it is a when. Stocks go up, stocks go down. Stocks go up, stocks go down. Stocks go up, stocks go. That's all they do. They go up, they go down. They do not come to your house. They do not wash your dishes. They do not take the dog for a walk. They do not make the bed and put those little candies on your pillows. No, stocks go up, stocks go down. So if you know when a stock is going to go up, now, most dividend stocks go up just before the dividend date. And if the dividend date, what the hell am I looking for? Oh, okay. If the dividend date is plain and clear as day, you can take a look at any one of these stocks. Let's go, for the fun of it, let's go back 1 month, right here. Here we go, NextEra Energy, the 22nd. The dividend was 51 cents. Now, if I wanted to buy the dividend, if I wanted to collect the dividend on NextEra, I would buy it 2 weeks before the dividend date on a Monday. So, November 4th. Let's take a look at the opening price on November 4th for NextEra Energy. Okay. November 4th. Where was it? November 4th, right there. Okay. So, November 4th. Here it is. Opening price, right up here. $83.49. Okay? How much was the dividend? Let's go back. Oops. 51 cents. Okay. So, if the opening price, $83.49, right? The dividend's 51 cents. Okay, so if I add the dividend into the opening price, 51 cents, it would be 84. Correct? Okay, so let's do it again, in case you missed it. Okay? NextEra Energy, NE, has a 51-cent dividend, right there, 51 cents. 2 weeks before the 22nd is the 8th. Okay? On a Monday is the 4th. Okay? We can't argue. You cannot argue that. Okay? Here's the date. 2 weeks on a Monday is the 4th. The opening price of the day plus the 51-cent dividend. How many days is it going to take to hit that target? Okay, so here we go. Here we go, right there. Here's the 4th, right here. The open of the day, the high of the day, the low of the day, the close of the day, the range, and the year, whatever you want to call that. Okay, so the opening of the day is 83.49. What is 83? Clear. 83.49. Okay, 83.49 The dividend, 51 cents, plus 51 cents. Gives you a grand total of $84 even. Great. So if I'm buying it at the market open 2 weeks before, on a Monday, at the opening price, we know what it is, $83.49. Okay? Add the dividend to it, 51 cents. Now I have an exit target of 84. Great. What was the high of the day? Oh, 84.08. So I would have been in the morning, out in the afternoon, and I would have collected that 51-cent dividend, or the equivalence. Okay? And if you didn't do that, well, what happened? She went down and then she went up. Okay? Stocks have a tendency to go up just before the dividend. See, the dividend is right here, right? Stock went up just before. See, here's the dividend. Right there. Okay? That's the dividend. Stocks have a tendency to go up just before the dividend. 2 weeks on a Monday, she still went up. It's really not that difficult. The reason why I use dividend stocks is because they're consistently predictable. Stocks have a tendency to go up in value just before the dividend. So, if you knew the stock was going to go up just before the dividend, what trading strategy would you use? Would you buy the stock? Okay. Would you do a covered call? Would you do a spread? Would you do an iron condor? Would you do a double diagonal? There's so many different trading strategies out there. Let's go here. Let's go here. Okay, so look at what we got. We could just buy an option. We could do a vertical, which is, buy one option, sell another option against it, and get the difference between the two. That teaching along is priceless. Yeah, thank you. Back ratio, you could do one of those. Those are complicated as hell, but they're profitable. Okay, a calendar. Ooh, I love calendar spreads. Diagonal, a straddle, strangle, covered stock. This is the one I like. It's the simplest and the easiest. The covered stock. You buy the stock, you sell some of the option, which is the right to buy it from you for the exact same price you just paid for it. Okay, if you don't think the stock is going to go up, if you're not okay with buying it, if you don't think it's a good company, don't buy it. It is that simple. If you're going to invest your money, you got to put it somewhere. You have two choices. Do it yourself or give it to someone else. It's actually that simple. It is. Do it yourself or give it to someone else. Have them do it for you. Okay, they have a lot of investment advisors, a lot of fund managers. A lot of people would love to take care of your money for you because they want a slice of the profits. Okay? So, why do I use dividend stocks only? Because they are simple, they are safe, it's predictable, it is consistent. It gets me 1% every single week. Now, I've been getting 1% every single week for over 15 years. I've been trading for 20 years. My first 5, not that glamorous. It wasn't until the time my daughter jumped on my lap. Dad, can you teach me how to do this? So it took me a while to figure out what is a good trading strategy for someone who knows absolutely nothing. What is it? Buy a good company, one that is consistently profitable. When I say consistently profitable, you can do whatever you want with your money. What I won't do with my money is a company that's consistently profitable and has weekly options. Do you trade weekly options in anticipation of dividends? Yes, I do. But I don't want to collect the dividends. Thank you, NK. Hey, I'm back. Invest right. Cool beans. All right, Eli Lilly. All right, we looked at those. QCOM. Ooh, Mikey wants to take a look at QCOM. All right, let's get out of here. Oh, let's go back to here and put QCOM in here. QCOM. Here we go. QCOM 158.90 to 159. Don't have one. The 160s are going for 102. 157s, I'm losing 2. That doesn't work either. Fuck. It doesn't have a 159. There's 160, and it's only paying $1. A buck? A buck on a 160? Not quite. Sherry, perfect. I'm assuming Sherry. Sorry about that. It takes me a while to get through all the questions because I'm answering a question. Can we see the stock Macy's, please? We already looked at Macy's. Okay. Okay. Hold on. Jesse, you get 800 a month and you love it. Awesome. So QCOM, I'm looking at it and look at where it is. Oh my goodness. Do you think it's a good buy? I have no idea which one you're talking about. Okay, hold on, let me see. Uh-oh, no, that wasn't what I was, damn it, forget it. All right, anyway. Andrea, this weekend is Thanksgiving weekend. How about next weekend, Vegas? Macy's. All right, we'll take a look at Macy's. Hold up a second. QUBT. What the heck is that? QUBT. Quantum computing. I'm going to say no to that. Okay? Look, it was less than a buck a couple of weeks ago. Now it's over 9. And look at the volume, 134 million shares. Yeah, I don't want to strap myself to a freaking rocket. No, thank you. Sorry. Andrea, were you planning on going to Vegas? Okay, I'm supposed to be going to Vegas. I could do it this weekend. I could do it next weekend. I don't know. I'll have to ask the person in which I'm going to see in Vegas which one works better. Me, I'm retired. It doesn't really matter to me. Qubit, we're looking at Qubit. Pfizer, let's take a look at Pfizer, PFE. Pfizer, ooh, interesting chart. Okay, the chart looks interesting. I like this bounce right here. 26.12 to 26 is going for, over 1%. I like over 1%. LJ Mass, we already looked at Lockheed Martin. Sorry. Already looked? No. James, you live in Florida. Orlando, yes I do. Can we look at Wayfair? No. I'm not looking at Wayfair. I'm pretty sure they're not 20 years old. Okay? If they're not 20 years old, how can they have 20 years of increased dividends? It's a very interesting question. Like, you think Wayfair has 20 years of increased dividends, yet is the company even 20 years old? I don't know. Let's look at Pfizer. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up, down, up, down. Now she's coming up. Look at the high here. Look at the bottom here. We got a long way to go for this thing to go challenge that high. Well, I like that. That, to me, looks good. However, what does it normally do this time of year? For that, we look at the seasonality chart. The seasonality, ooh, look at that. You cannot mistake that for anything else. Look, here's where we are. The blue dot is today. Okay, the blue represents this year, which is this. The red is 10 years worth of data. That's 2014, 2015, 2016, 17, 18, 19, so on and so forth. 10 years of data. How has it moved on average every single year this time of year? Well, it goes up. All right, great. Well, let's go back to the 1 year chart. Let's take a look at the big, okay. Okay, a year ago, we're at 31. She drops back up, drops back up, drops back up. Cool. Let's look at the last 90 days. The last 90 days gives me a good idea of what she's been doing. Okay? Down, up, down, up, down, up, down, up, down, up, down, up, down. Now she's going back up again. Look at all this space up here. The high is here, which is just under $30.50. Okay, and look at, she's going nice to the upside. Now, is that guaranteed? No. The only thing guaranteed is death and taxes. Okay, but there's a couple of questions you need to ask yourself the last 30 days. Hold on, last 30 days. Yeah, this is a 30-day chart. Look, down, up. Simple. Down, up. It's like a teeter-totter. Remember those? Seesaw? Up, down, down. Balance, down, up. Okay, whatever. So, a couple of questions you need to ask yourself. And I say this every night. A couple of questions. Number one, does it make sense? Seriously, does it make sense? Do you not look at the balance sheets of the companies? Pfizer looked good for an uptrend coming. That's an excellent question. Do I look at the balance sheet? Well, let me ask you a question. You could look at my balance sheet. My balance sheet shows 98% of my money invested and only 2% balance. 2%. Okay? That's it. Banks don't like my balance sheet. Okay? I say, all right, well, how much money you got? Well, I got a bunch. Well, where is it? It's all invested. Well, how much liquid do you have? I don't have any liquid. Okay? I have all my money invested at all, 98% of my money invested at all times. Why? Well, because I believe in the American economy. I believe in Pfizer. I believe in QCOM. I believe in AT&T. I believe in Ford. I believe in Walgreens. I believe in every single company we have here. Okay, they're my brothers, my sisters, my cousins, my uncles, the guys down the street, the people I see when I go shopping. They work at the stores. Okay, we are a consumer-based economy. Everybody works somewhere to produce something for the economy to continuously roll comfortably. Okay? Now, it all depends on where you want to put your money. Because at some point in time, whether you want to agree with it or whether you understand it or not, you are going to be too old to work. Can we look at AT&T? I don't like AT&T. They have crappy premiums. But we'll take a look at it. At some point in time, you are going to retire. And there's only 3 ways of doing it. Okay? Or I shouldn't say retire. There's only 3 ways you're going to stop contributing to society in a productive manner, okay? One is you're going to retire, you'll age out, which means you are too old to continue doing that work. It means you're just too old to do it. It's plain and simple. You get to your 80s, 90s, and your 100s, you just can't do the same things you did when you were in your 20s, 30s, and 40s. It's just logic. 2, you can do what I did. You can walk out. Means you go to your boss and you say, you could take this job and shove it. I ain't working here no more. You can walk out. You get enough money in your little bank account that makes you a consistent return that takes care of all your bills. That's walking out. Or 3, you can toe tag out. Do you know what that means? Yeah, they slap a toe tag on you and they just drop you in the morgue. I know a lot of friends of mine. Okay, he was the best friend. He was the best man at my wedding. He toe tagged out. He was on his way to work, died on his way to work. His little brother, younger than him, he died on his way to work. My younger brother, he died before he could go to work. I mean, before he could, do anything. Okay, you got 3 choices. That's all you got. You're going to age out, toe tag out, or walk out. One or the other. You choose. But at some point in time, you got to take whatever money you accumulate along the way, and that has to last you for the rest of your life. However you want to live. You want to live in a tent in the woods? Well, you don't need a whole hell of a lot of money. You want to live in a beachfront condo in Maui? Well, you're going to need a shitload more. It all depends on how you want to live. You want to live like a king? Fine, you need more money. If you want to live comfortably, you don't have a lot of expensive taste, well, you don't need that lot. You don't need a lot. All depends on what you want. Or are forced out by jobs moving overseas. That has nothing to do with retiring. When I say retiring, I mean stop working, stop contributing to society. Okay? Either you can do it or you cannot. Now, I was on my way to check out my boat because I was supposed to be in the Caribbean this winter. Could you please give me a top 5 stocks so I can look at them? Macy's, Nordstrom, Kohl's, Ford, General Motors. Okay, LMT, okay, LJ Mass, LMT, Lockheed Martin, we already looked at that. We already said the numbers just don't work. Update on Pfizer. Well, we're looking at Pfizer right now, all right? 30-day bottom, just recently. Now she's on an uptrend. The 26.12, the 26 is going for 30 cents a share. Okay, that's going to give me well over 1%. Okay, that's what I'm looking for. Safe, predictable, consistent. What's my top three? Well, Macy's, Kohl's, Nordstrom's. LMT, we looked at that one. Update, yep. Ooh, FNILX. What the hell is that? Now, here's a hint. Anytime I get that weird look on my face and say, what the hell is that? That's usually going to be a no. So let's take a look. See if I'm right. FNILX. Well, let's try that again. FNLIX. Uh-oh. No. FNILX. Oh, Fidelity Investment 0. Okay. Hell no. That was quick. XYZ Steve, Pfizer, we already looked at Pfizer. Ted, wow, up, down, up, down, up, down. You're technicals. You like that, Ted? Well, think about it. Okay, seriously, think about it. Okay, look. AT&T, up, down, up, down, up, down, up, down, up, down, up, down, up, down. You know, that's all they do. You want to get technical? You want to do some real deep dive, some real heavy shit? It's going to scare away half the people here. No, I don't do it. Okay? I tell you, I teach one trading strategy and that's it. Okay, Ted? King Chomps. Do we think the big sell is coming soon as people take profits and are piling up? Orlando, your shirt should say, hell no. Yeah, probably should. Pickled Peanuts. Dude, I haven't heard and seen you for a couple of days. How are you doing? QUBT. Oh boy. What the heck is Q? So anytime I say QUBT, anytime I say what the hell is that, it's usually a no. What's the ticker symbol for Kohl's? KSS. QBT, no. Pfizer. Steve Weir looked at Pfizer. Who do you think will be the next SE? Is no concern of mine. Johnson Johnson. We looked at Johnson Johnson. Kike Simone. Tesla. No. No dividends. No, thank you. Brian, we already looked at Johnson & Johnson. The premiums really aren't that great. Less than 0.5%. No, thank you. Hat and Mustache is lit up in Dividend Stocks gift gallery. Anyone who sends a gift, blah, blah. Okay, interesting. Lucas. Look at B. W. What the heck is W? Wayfair. Oh, imagine that. Wayfair. Somebody wanted to get Wayfair. Okay. Oh, here's Wayfair. Before I even bother with Wayfair, let's go and see how much dividends they have and how often they consistently increase their dividends. James, James, why do you like coal so much? Please elaborate. Okay, Orlando, the reason why I like coal so much is it gives me 1 to 1.5% every single week for at least 6 months. Okay, Wayfair, here we go. Historical data. Okay. Historical prices, dividends only. Oh, imagine that. Wayfair. There are no dividends in the selected time period. Wayfair, no thank you. Tesla, no dividends, no thank you. Peanut butter and jelly? Wow, okay. You like that, Orlando? Okay, Brian, Johnson & Johnson, we already looked at the numbers, no. Kike Simone, Tesla, no. Uh-oh. Benzu, I feel a little bad for you. What do I think of NVIDIA at the moment? All right, Benzu, are you ready for this? Are you sure? Because when I tell you this, you're going to feel foolish. Maybe you will, maybe you won't. Who knows? NVIDIA. Wait a minute. I got to bring up some. Who just looked at NVIDIA? All right, right there, Benzu. Okay. Now we're going to go back to Yahoo Finance, okay? And we're going to put in NVIDIA, NVDA. I get people asking me about NVIDIA every week. Okay, so here's NVIDIA, 136 bucks. Wow, look at the dividends NVIDIA pays. Uh-oh. AGNC, can I buy and hold this one? Also, it's a covered calls. Yes, you can. Okay, Benzu, are you ready for this? Can you see this screen? This screen right here is live on YouTube. Okay? This is Yahoo Finance. Now, I like Yahoo Finance. I've been using it for 20 years. You can go to Google Finance. You can go to CME. You can go to NYSE. You can go anywhere you want that has financial data. Okay? Hey, Dexter, how you doing? Are you paying attention? Okay? The dividend for NVIDIA, September 12th, 2024, 1 penny. June 11th, 2024, 1 penny. March 5th, 2024, goose egg, nothing. December 5th, 2023, goose egg, nothing. Why would you invest in a dividend stock that pays a penny for a dividend? That's only half of it. But wait, hold on, seriously, but wait, it gets worse. Really does. Statistics. Oh shit. They actually went down in value. Book value, right there. Book value per share. $1.74. So explain to me in a manner as if you thought I was third grade education level. Okay? Why do you think NVIDIA is good if the book value is only $1.74 and the dividend is 1 penny? Explain to me in a manner which I'll understand it, because I don't understand at all why anyone would put money into NVIDIA. Okay, if the court says, if the Supreme Court says you guys got to liquidate and pay off all your investors, you're going to get $1.74. You pay $135 a share, yet it's only worth $1.74. Okay? Take a look at Ford. Okay, right now Ford is $11.40. Okay, what is the book value there? $11.15. That makes sense. Well, how about General Motors? General Motors at this moment in time is $59.20. The book value for General Motors is $64.49. So you're buying General Motors below the value. Yet you want to buy NVIDIA, which has $1.74 value. If you liquidate everything NVIDIA owns, you're going to get $1.74. If I buy General Motors at $59 a share and they liquidate, I get $64. I come ahead of the game. You're not. Seriously, dude, check the numbers. Why would you buy a stock that's only worth $1.74? Why would you pay $130 for it? It boggles my mind what some of you people do. Like, what the hell are you thinking? Okay, Brian, we're looking at Johnson & Johnson. It's going to be a no. No dividends, thank you very much, KG. No dividends, no thank you. Which stock pays out the best dividends? You're asking the wrong question. Okay? There's a huge difference between what you think is the best dividend and what actually is the best dividend. So if you have a company right here, let's take a look at Wayfair. Let's say that $47.95 is the current stock price. Okay? What do you think a good dividend should be? 1%, 2%, 5%, 10%? What do you think? I mean, think about it seriously. Do you think it should be a high dollar amount? There are companies that pay a large dividend, but they're pieces of crap. They're trying to suck you in with that large dividend. No possible way they can sustain it. So when you're saying the best dividend, is that the longest duration? Well, you have GPC, Genuine Parts Corporation. They've been increasing their dividends every single year for 7 decades. I bet most of the people in this audience aren't even 70 years old. So it depends. Do you want a high dividend on a brand new company that doesn't have any hopes or prayers of even being there in 5 or 10 years? It all depends on what your goals are. If that's what you're looking for, you're looking at high dividends, there's a lot of different places you can go to find that out. Okay, Bandy, uh-oh, hold on a second. NVIDIA stock, uh-oh. I love it when someone tries to set me right. NVIDIA stock is forecast to grow by 25%, and GM is supposed to decline by 10%, and they don't pay their debts good, but I did a quick look on GM. Well, alrighty then. There's absolutely nothing wrong with that, okay? You can invest any way you want, okay? Has NVIDIA increased their dividends to their shareholders? No, they're at a penny. How can you possibly increase your dividends if you're at a penny? Okay, no thank you. Okay, General Motors has been around for 100 years. They've seen a lot of shit. How long is, you know what, I don't even know. Let's find out. When did NVIDIA start? Oh, imagine that. NVIDIA was founded in 1993. So you're comparing a company that's been around since 1993 to General Motors, who's been around since the 1800s. Okay, NVIDIA has not seen World War I, World War II, Korea, Vietnam, the stock market crash of the 20s, the, what do you call it? The Great Depression, okay, the oil embargo of the 70s, the crash of the 2000s, the dot-com crash, Y2K, no, this thing hasn't seen shit, in my humble opinion. What are they, 30, 31 years old? There's a huge freaking difference between 31 years old and 100 years old. And 31 years old and their dividend is a penny? Oh, hell no. You can do whatever you want with your money. I like consistency, predictability, and safety. Okay? I don't like NVIDIA. Sorry, the numbers just don't work for me. Okay, Rude Dude, I appreciate your time and knowledge. Thank you. Well, thank you for that. Okay, Bendix, been looking at a lot of dividend aristocrats. Seems like most lack the weekly options you want. Yeah, unfortunately, that's true. Same thing with the dividend kings. Okay, just because it's a dividend aristocrat or a dividend king doesn't mean I'm going to invest in it. Okay, I specifically look for companies with weekly options because I'm looking. This is what I'm looking for. You guys can do whatever you want. Orlando, they need to update the book value on NVIDIA. They have never hyperscalers and been in the chips, and it's in the billions. That doesn't mean shit. Okay, just because they're, you know, dude, last year, wait a minute, 6 or 7 months ago, the book value was $2. $2. Now they're down to $1.74 per share. It's not that they have to update. It's just the company's got to get better. I don't like NVIDIA. Sorry, I just don't. Okay? All right. All right. VL9000. Hi, James. Just want to say thank you for the dedication and your education for the last year. Thank you. I appreciate that. KG, is 2 weeks before the dividend date usually the EX date? No. Okay? The EX date, see, interesting thing is the EX date is the last day the stock trades before the dividend is paid. The date of record is whoever owns the stock on the date of record is entitled to the dividend. Okay? It used to be a couple of days because you used to have what's called settlement, which means you buy the stock and you needed 2 days to settle. Now they get down to 1 day. So, not the same. Mateo Jose, Pool? Is there a stock actually called Pool? They do. Pool Corp. Interesting. It's a no, but okay. The EX date is key. You're absolutely right, Ronford. Oh, I missed some questions. What am I missing? 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 Hello, Pfizer. I already did Pfizer. Victor, you're up 26%. Good for you. Can we look at my stock? Why don't we go look at my stock? Okay, what do I have? I have Advanced Auto Parts, Harley Davidson, Intel, Macy's, Marathon, MPW, Riley, and Walgreens. Okay, that's in that account. This account, Advanced Auto Parts, CVS, Halliburton, Harley Davidson, Home Depot, Kohl's, and Walgreens. Account number 3, Apple, Home Depot, Harley Davidson, Kohl's, MPW, Walgreens. Okay, now I say I have 6 accounts, but I only share 3 of them with you. Okay? I have 6 accounts, I only share 3. I'm a nice guy, but I have to cut it off somewhere. No! You. Y-O-U. What the hell is Y-O-U? Usually if I say, what the hell is that? It's going to be a no. Imagine that. It's a no. Weekly options? No. No weekly options? No, thank you. That's a monthly. Means I can do it once a month. Once a month is 12 times a year. If I average 1% to 2% on an option, okay, that's 12 to 24% a year. If you like 12 to 24% a year, fine, good, great, dandy. James Nvidia joined the Dow. Isn't that a reason they should update their book value? No. The book value is based on their assets. Okay, hard assets. That's a book value. Okay, so if they are hugely in debt, well, then they have to pay that debt back. Should I invest in a porn film company? Anyway, Pola wants to take a look at Alibaba. B-A-B-A. XYZ Steve, can you see my comments? Yes, I can. However, now you got to remember, Mr. Steve, I have Instagram over here, I have Twitter here, TikTok here, YouTube here, another Twitter account there, and another YouTube down here. So I get 7 accounts going at one time. I try to get to every single question. Now, it takes me a while to answer questions. So there are questions that have been asked that I haven't gotten to yet. A whole bunch of them. I will go through them as quickly as possible. As soon as I answer a question, I go on to the next one. XYZ Steve, Pfizer. We already looked at Pfizer. And you spelt it wrong, by the way. Alibaba. Okay, Alibaba, here we go. Alibaba, here's the high, here's the low, here's where it was, here's where it is. It's going sideways, then it goes up, now it comes down. It's at 85.58. The 86s are going for $1. That's over 1%. Cool. Do I like Alibaba? I don't think they have dividends. B-A-B-A. Okay, Alibaba, $85 a share. What's the book value in Alibaba? Holy shit! Alibaba has $405 book value, and they're only $84 a share? Holy shit. Okay, historical data. Let's take a look at their dividends. How well do they share their profits? Oh, yeah. Fuck nuggets. Okay, I'm going to say no to Alibaba, and here's the reason. Alibaba has paid 2 dividends. That's it. Just 2. Orlando, yes, but why did the Dow accept them into the Dow Jones? NVIDIA must be doing something right. Please explain and let NVIDIA be at rest tonight. I'll let it be at rest tonight. I really don't care about NVIDIA. Okay? Now, I appreciate the commentary. I appreciate the interaction. I appreciate all the questions. You asked me a question, I gave you an answer. You don't like the answer, I can't help you out with that. Come up with a better question. Why don't I like NVIDIA? Because the dividends are crap and the book value is way out of whack. That's it. End of discussion. Ping tutus look great. I can probably fit in one, but I ain't gonna buy one. It's plain and simple. NVIDIA, no, I don't like it. The dividends are terrible. They don't have 20 years of increased dividends. Okay? The book value is $1.74. No, I don't care. I honestly really don't care that the Dow has brought them in. Don't. It doesn't concern me. What about Microsoft? Love Microsoft. Microsoft is awesome. Let's show you what Microsoft should look like. MSFT. Okay, Microsoft. We all know who they are. Let's take a look at the dividends. Are you ready? Let's go all the way back. They've been paying dividends more than that. 86. They've been paying dividends since 1986. All right. So it goes from 8 to 9 to 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year they increase higher and higher and higher. What's the book value of Microsoft? Oh my God, really? Why do you want to give me a hard time, dude? Microsoft is on the list. The book value per share of Microsoft is $38.69. I think it's a little crazy. $416 a stock. Beautiful. Microsoft is just beautiful. Yes, it is. Not now. Here we go. So let's go back to where we were. Holy cow, we're at 11 o'clock. Woohoo! All righty. NUE. Is that Nucor? NUE? Nucor. Yeah, okay. The high of the year, the low of the year, up, down, up, 150, it should be 154, the 155 is going for, okay, 105 to 210, so you might be able to get it doing the 155s, because right now, the last trade was 153.44, so I'd be looking for $1.54, but look here. 105 to 210. So you might be able to get it here at the 155. All right, well, let's take a look. That being said, Nucor, a year ago, we were at 159. She jumped all the way up to the high of the year at 202. Bedtime, James. Good night. See you next time. All right, Orlando. Do me a favor. Once I say no, just let it go. I mean, I don't want to continue arguing with people. You know, if I say no, I say no. You know, that's just my opinion. You like it? Fine, you buy it. All right. Nucor. There's the high. The bottom was recently, within the last 90 days. Invest right. Do you have any Canadian stocks that you like? If they're trading in the U.S. stock market, yes. If they're not trading in the U.S. stock market, then no. Okay, everything I trade is in the U.S. stock market. I don't know anything about the Canadian stock market. The only thing I know about European stock markets is the options can only be exercised on the expiration date. Here's the last 90 days for Nucor. Okay, down, up, down, up, down, up. Okay, it's going to the upside. The gap already filled, lovely. The high's way up here at 170. We're currently at 153. What does this normally do? Seasonality, there you have it right there. Normally, look at the fourth quarter. Here's the fourth quarter right there. Okay, the fourth quarter starts at the beginning of October. Nice to the upside, right to the end of the year. We're right here, right now. This the blue dot represents today. Okay, right here. This is what we got for the rest of the year. Nice to the upside. So yeah, Nucor looks good. Let's see what the numbers look like. The 154, 152, 155 is right there. So let's do that one. Covered stock at 155. That's the closest one we're going to get. Just one contract, please, and thank you. At the market, first thing in the morning, let it fill. All right, thoughts on Google? Hell no. Okay, they don't have 20 years of dividends. All right. 292 is what I'm going to make. Up by one covered call. New core 100. Jumps to the weeklies. 29 November 24. That's this coming Friday. The 155 call strike against the stock Nucor NUE. Okay, at the market to open. My break even is 152.07. Well, we're currently at 157. All right, so that's my break even. The maximum I'm going to make on this trade is 292 per contract. 292 divided by 15,208. That's what 100 shares of that stock is going to cost. Okay? But it's going to give me 1.9%. Do you have any idea what 1.9% every week is? Compounded over the year? Well, let's multiply it by 52 because there's 52 weeks in a year. Okay? That's 99.8% return for the year. Well, that's a nice rate of return if you think about it. All right, let's get out of there. Let's get out of here, get out of here, go back to here, out of there, and here we go. All right. Okay, TSLY, no. What was number one? Sorry, just got here. Number one, I have no idea what that means. Not in your business, AT&T. We already looked at that. It's no. It's at the high of the year, no. Valdez. Target, jelly beans, let's take a look at Target. Target, we were looking at that one. It looked very good only because, hold on, we're going to take a look at Target. We had a black swan, okay? Black swan is an over, wait a minute. Glad I got one good finally. Thanks for the education, CJ, way to go. All right, so Target, high of the year, the low of the year. Look at this, goes, jumps up. Comes down, goes sideways, big huge drop, the black swan, hits 120, and now we have 3 days to the upside. Okay, you cannot get any lower than the low of the year. Look at this. That's the low of the year right there on Wednesday. Thursday was higher, Friday was higher, today's higher, gapped up. Look at the big space that this is going to fill in. Target is a great trade, in my humble opinion. It is on my list. I do have some Target because it just makes sense to me. 86, dude, how are you doing here? Yuma Ali invites you to co-host. Cool beans. I'm not quite sure how that even works. Okay? And I don't know you, so I got to say no. I respectfully decline because I have no idea who you are. Jose Campo, thank you for that. Fest Crown is lit up in gallery gift. Cool beans. You're conscious. Why do you want to collect the dividends? I don't want to collect the dividends. You weren't paying attention. Okay? You're conscious. Okay? When I say I like dividend stocks, I say I like the stocks because a dividend stock has a tendency to go up just before they pay a dividend. So if you know a stock is going to move and when, well, there's a whole bunch of trading strategies you can do. I teach just one here. Okay, the one that I teach here is called the covered call. If I know when a stock is moving up and I buy that stock just before it moves up, I collect that 1%. Thank you very much. That's 50% per year for me. It works for me. Okay, that's why I continue doing it. Denny, do I hold anything long term? No. I was trying to think of something witty to say, but it was just drawing a blank. No, I don't hold anything long term. My idea of long term is a month. TSLY, Sir Sipalot. TSLY is directly related to Tesla, which is a no. The unconscious stocks go up, down after that. Okay, whatever. What's your favorite dividend stock? Macy's. Do you have any positions you hold long? No. What about IONQ? What the hell is IONQ? That should give you one. What do you call that? IONQ. Yeah, hell no. Okay, hold on. It's got some weekly options. Alrighty. Let's see how often do they pay their dividends. IONQ. Historical data. Alright. Dividends only. Oh, there are no dividends in this time frame. No dividends, no thank you. Sherry, I'm open for both. Cool beans. All right. Sherry, like I said, I am going to give you a buzz after the show, which is what, 15, 20 minutes. Mario. Oh, no. Snowflake, double no. ROKC. What the hell is that? ROKC. Cannot find that symbol. Sorry, can't find the symbol. It's going to be a no. Both weekends work. Cool. Altria. Jimmy. What about Procter and Gamble? Ooh, I like Procter and Gamble. Over 100 years old. Dividend king. Okay. Unfortunately, Procter and Gamble is going to be a no. It's at the high of the year. I'm not quite sure, why anyone would buy something at the high of a year. Okay? You make your money in the stock market buying low, selling high. When have you ever, any one of you, when have you ever heard somebody say, hey, the stock's at the high of the year, let's buy some? Yeah, no. Low, high. Not high, low. All right, Jimmy, Altria. No. Buy high, sell higher. Blue sky breakout strategy. Yeah, more power to you, brother. I don't play that game. I like simple, safe, predictable, consistent. I'm not in the position where I want to put a bunch of money into something in hope that will go higher. Yeah, no, sorry, I don't play that game. I play safe, predictable, consistent. You can call me an old man if you like. I really don't care. You can't offend me in any way whatsoever. All right? What about NEE? Ooh, Nextera. I like Nextera. I do. Actually on my list. MO, Altria. No, because it's too high at the moment. NEE. Nextera Energy. High, low, where was it? Where is it? Look at this. Up, down, up, down, up, down. Now it's going back up again. 76.95 to 77s are 27 to 75. No. I like Nextera Energy. I really, really do, but not this week. I'm not against your strategy. Okay, hold on. I'm not against your strategy. I'm just trying to understand it from beginning to end. DYOROFR. Dioffer? All right, dioffer. Let's see if I can explain it to you in this manner. Let's see. Now, I don't know if you know this, but I have 2 YouTube channels. The one you're on right now, which is me standing in front of the computer screen, that's the channel you're on. The other channel for YouTube is just the screen only. Okay, just 100% the screen. It allows you to see all the little tiny numbers. Okay, so here we go. You don't understand it? Let's see if I can put it to you this way. I only buy companies that are consistently profitable. That's kind of like a no-brainer. It makes sense. Okay? I buy them at the current price if and when the chart tells me to. I don't like buying at the high, and I don't like buying at the low. I like buying it right about here. Okay? See, the stock comes down, then it goes back up, goes down, then it goes back up, goes down, then it goes back up. As unbelievable as it may seem, people just don't get it. Stocks go two directions and only two directions. They go up, they go down. They go up, they go down. That's it. Okay? They do not come to your house. They do not make your bed. They do not put little candies on your pillow before you go to sleep. No, they don't tuck you in. They don't take the dog for a walk. They don't even empty the trash. They go up, they go down. That's all they do. That's it. Now, I like dividend stocks, specifically companies that have consistently increased their dividend payments to their shareholders for more than 2 decades. That's 20 years. Okay? At the moment, we checked 2 days ago, there was 9,743 companies that you could invest in at any moment in time. That's a lot to choose from. Now, I get 6 accounts. I share 3 of them publicly. Okay? So you get to see exactly what I'm buying, what I'm selling. Okay? I don't hide anything. Right? So, I buy a good quality stock. I buy it at a certain price when the market turns around and goes back up, and I sell it for almost the exact same price I just paid for it. Why do I do that? Well, here's the thing. If I buy it at 77 and I sell it at 77 and I collect a 1% premium for doing that, I buy it on a Monday and I'd really like to be out by a Friday. That's 1% for the week. 1% a week is over 50% per year. Now, when I always do a video, you always hear me say the exact same thing. Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, for those you do not know, the 10-Minute Trader just so happens to be
There are 5 keys. Hi, I'm JC, and I'm the 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average bear.
The 10-Minute Trader. When my daughter, was 9 back in 2008, she jumped up in my lap and said, "Daddy, what are you doing? Can you teach me?" Okay, so here it is. 9-year-old. How do I teach her how to trade without losing? Because if she starts to lose, she's going to cry. I'm going to feel like crap. Mom is going to get involved. I'm going to be sleeping on the couch, even though it's quieter on the couch. Anyway, it just adds friction to my home life. I didn't want that. So it had to be simple. It had to be safe. It had to be predictable. It had to be consistent. And there was no way she could possibly lose. That's the 5 criteria I had to come up with for my daughter. Okay, this is her at 11. So at this point, we first started sharing on YouTube. That was 12 years ago. Okay, now, simple, safe, predictable, consistent, 1% per week. That's my goal. Could I make more money sitting in front of the computer doing all kinds of other neat, fun stuff? Yes, I could. However, at some point in your life, all of you, okay, nobody is ever on their deathbed saying, "Oh, I wish I would have worked more. Wish I would have earned more money." Nope. Nobody ever says that. They don't. I wish I'd done this. I wish I'd done that. But never, I wish I would have worked more. I wish I would have made more money. Nope. Today, I hung out with my grandson. He took his very first private jet ride today. We had a blast. It was a pain in the ass. Had to drive to the airport, jump on the plane, take the plane ride, he had a lot of fun. That's all it was about. It was about me getting one picture, one good quality picture with my grandson so I can hang on the wall and I can always look at it and always remember the smile on his face, the laughter and the giggling, all that kind of stuff. That's what I did today. I hung out with my grandson. At some point in your time, money loses its luster. Okay? You're not working for money anymore. You're working to spend time with your family, with your relatives, watching the grass grow, planting flowers, walking in nature. Money comes, money goes. But that 2 or 3 hour time with my grandson, that you cannot buy that. Okay? That is something money cannot buy. Time is something you can. All your money won't another minute buy. Wasn't that Seals and Croft? Crosby, Stills, Nash and Young. Wasn't that them? All your money won't another minute by dust in the wind. All we are is dust. Remember that? All your money won't another minute by. So nowadays, I spend my time coming up with ways of spending time with my family, hanging out with my kids and whatnot. Do you like the stock FRT? No. Sorry. So that being said, I forget where I was going with that conversation. Oh, at some point in time, you will come to the realization that money is not that important. So if I make a simple, safe, predictable, consistent 1% every week, that takes care of all my bills. Am I interested in looking at other things? No, I'm not. It's actually that simple. Am I willing to look at something else and change everything that I have? No, I'm not. Because if it ain't broke, don't fix it. I grew up in the 60s, 70s, and 80s. If it ain't broke, don't fix it. You sell covered calls, how far out? 5 days. That's it. I buy on a Monday. I sell weekly options. 5 days. That's it. Friday comes. I decide what I'm going to do. Okay? Monday comes. Now I have all this money to invest. What am I going to buy? Great. Friday comes. Great. What's the safest place, the safest strategy for me to do today? That's my main concern. All right, let's keep on going. I'm not going to take any more questions. We got 2 minutes left. I'm just going to go through these and see what we got. What is this, Victor? I have no idea. Are stocks always feminine, kind of like cars and boats? You could say that. You're a good teacher. Thank you. Paul, thank you. Chevrolet, honey, I haven't seen you for a while. What are calls and what happens if you don't get the call? Oh my goodness. Dude, you're relatively new here. A call is a stock option. It allows you to buy a stock at a certain price by a certain date. So if you look at here behind me, NEE next here, it's currently at $76.95. The closest strike price to that is going to be the 77. So if I buy it here, $76.95, I can sell somebody the rights to buy it from me at 77 between now and the options expiration, which is the 29th of November, which is this Friday. What am I looking for? I'm looking for 1%. Well, the 76.95, the 77 is going for 27 cents. That's only a 0.5%. That's going to be no. Chevrolet, like I said, I haven't seen you in a while. I'm on a different time zone now. Okay. What stock is on the screen? Nextera Energy. Toe tag 86. You like that one? Victor, it's just a stock photo. Okay. By the time I get up, you are going to sleep. Oh, thank you. I'm sorry about that, Chevrolet. You're welcome. I am taking my first loss of the year. Randall Ray, why? They cut dividends and no longer qualify. Okay, Randall Ray, I'm going to disagree with you there for a little bit. Just because they cut the dividends doesn't mean it's a good reason to get rid of them. Perfect example, 3M. 3M. They've been increasing their dividends for 62 years consecutively. Increase higher and higher and higher. They've been in business for over 100 years. This year, the CEO cut the dividends for the first time in 62 years. I'm not taking it off my list just because the CEO is an idiot. Okay? I would have done something different. Okay, to get on the Dividend Kings list takes you 5 decades. And here's a company that's been increasing their dividends for 62 years, and you think there's not going to be any pullback because you discount them, or you, what do we call it, decrease them? Yeah, that wasn't a very bright move. But hey, sorry to hear that. All right, Dizor, how do you pronounce that? Dioffer? So you buy Monday, sell Friday. What day of the week do you want the dividend to be paid on? I don't want to collect the dividend at all, dude. Seriously. Once the dividend is paid, the stock has a tendency to go down. Okay? Listen closely. Before the dividend, 2 weeks before the dividend, the stock has a tendency to go up in value. Maybe be a month before the dividend. But before the EX date, before the dividend is paid, stocks have a tendency to go up in value. After the dividend paid, the stock has a tendency to go down. So I want to jump in 2 weeks before the dividend and not collect the dividend. Okay? The dividend just tells me when the stock is going to go up in value. That's all the dividend tells me. All right, let's keep on going. Kohl's just by the CEO, not looking good. All right, not quite sure, but all right. Our active jobs are for the primary purpose to fund passive stock investing accounts. Okay. Fidelity 0. Okay. DG. Brian, I'm not looking at any more tonight, but I'll put DG down for tomorrow. Okay. Because we're past 11:30. ExxonMobil, sorry, Amy, past 11:30. Doing good, thank you. Cannabis Cam, all right. Dell, ooh, I like Dell. Vail, I don't like Vail. So these videos are pre-recorded, right? How can they be pre-recorded if I'm actually reading the question so these videos are pre-recorded? No, they are recorded, not pre-recorded, because they are being recorded at this moment on YouTube. So you can look at today's right now while we're interacting. Ready? Hello, 1, 2, 3, test, test, test. You know, that kind of crap. Yeah, you can watch that later on tonight after, you know, it's done recording. But no, I don't pre-record anything. Even the posted TikToks have old info listed as new. I have no idea what you mean by that. Oh, those might be the old videos. We say on this day. All right, so I take them and I update them. But mostly I'm looking at the same thing all over again. Alex Smith loves you. Woo, bold. Yeah, we're not going to look at that one tonight. All of the question he is reading have not been posted. I have no idea what that means. All the questions he is reading have not been posted. What does that mean? Sarah Giles Gardner, how are you today? Benzu, I own about 10 shares of NVIDIA. Should I sell at this point? I can't answer that question for you because I don't know anything about you. Metallica 23, because someone else will pay $150 a share soon. I have no idea what that means. Alrighty. I'm learning because of you. Aria! Thank you, brother. So animated. Cool beans. Book value of Coca-Cola is 10% of the stock price. Okay. Randall Ray. Uh-oh. I missed that one. Go back. Oh, that was Kansas who sang Dust in the Wind. Okay. Oh, wow. I missed all these questions. Isn't the stock market all psychology? No, it's not. Okay. Uh-oh. Wow. I missed a lot of questions. I'm trying to answer all the questions as best I can. All right, here we are right here. Because someone will pay, okay, got that one. I'm learning, okay, got that one. Book value, Coke, okay. Randall Ray. But General Motors filed bankruptcy and shareholders got nothing. Doesn't that reset them? Yes, it does, but they've still been in business for over 200 years. Went through Y2K, okay. Jim Bibby, how are you today? Thoughts on coin? They're not 20 years old, sorry. Randall Ray, Warren Buffett just bought a bunch of pool stock. Really? I'll have to write that one down. I'll have to take a gander at that one. Baidu or Alibaba? Ooh, good question. I'm on a mission to learn all of this. Alex, cool beans. Keep coming back every night. I'm here every night until the end of the year. Then I'll figure out from there. SPYG, hell no. Would I sell NVIDIA? No. What about Intel? Ooh, I love Intel. I actually have some Intel. What are we talking about? We're talking about dividend stocks and investing for a safe, predictable, consistent 1% per week. What did Warren Buffett buy? Pool, P-O-O-L. Are we talking about selling covered calls? Christiana Alvarez, Capasa, yes we are. What stock are we talking about? Can't see. That was NEE, Nucor. No, sorry, Nextera. Axon. All right, what is your favorite stocks to sell? That would be Macy's. How does a covered call make you 1%? Think smart, how are you doing? Let's go to Macy's, why not? I like Macy's. Macy's has been working very nicely for me. Okay, think smart, you ready? Here's the stock chart for Macy's. Here's the high, here's the low, here's where it was, here's where it is. This is the movement. Up, sideways, down, sideways. 15.94. Current price right now is 15.85. Okay? If I buy Macy's first thing tomorrow morning at 15.85, right? If I sell somebody the right, not the obligation, to buy it from me anytime between tomorrow morning and Friday afternoon through what is called a stock option covered call. Basically, I buy the stock, I sell somebody the rights to buy it from me. They can buy it anytime they want at 16. For that, they pay me a premium. The premium at this moment in time for the $16, see, 15.85, the closest strike price is 16. That's going for 46 cents. Now I know 46 cents does not sound like a lot of money, but 46 cents is over 1%. And if I do that every single week and I collect 1% every single week, that's over 50% per year. Okay, Chris McDonough, NUSI, never heard of him. Least favorite dividend stock? Oh, that's a tough one. That's a tough one between NVIDIA, SCHD. I have a bunch of them. What percentage do you get shares called up? Very rarely. Does it happen that some weeks there aren't any stocks worth to go into? Absolutely not, Tom. Always something. I love Dory. Nice to see you again. With all the weekly trading, what is the impact on fees, taxes, etc. on our approach? Well, this account here, the commissions and fees so far, the commissions and fees on this account here is $5,000 so far this year. Okay? Now, this account here has already made over $70,000. So $5,000 in commissions and fees to make $70,000, I think that's pretty okay. And taxes, I don't pay taxes. Now, I'm not saying you shouldn't pay taxes. I don't pay taxes because my accounts are set up in a way in which they are not taxable. So if you have an interest, if you have a issue with taxes, you need to speak to a tax strategist or a tax planner. The very first question you should be asking them, how much taxes are you paying? Should I be selling calls on SoFi? I don't like SoFi. No dividends, no thank you. Where are you pulling your data? Chris, I'm getting my data from Thinkorswim, which is owned by Charles Schwab, and the other data I get from Yahoo Finance. Okay, Thinkorswim, 86, blah, blah, blah. Momentum trading, okay, I see. Is this a good time to sell stocks? Christian, I don't sell stocks, I trade. What are your favorites? I already said that. Macy's, Nordstrom, Kohl's. Thank you. Thoughts on hymns? Nope. Thank you, Alex. DJT. Ooh, I love the idea of DJT. However, they don't have 20 years. Sorry. Considering new highs being made, yes, if you want to lock in profits. Okay. Isaac, thoughts on XLM? Nope. What chat stream is he even reading? Think smart. Okay, the chat stream I'm reading, I got one chat stream on Instagram, one chat stream on X, what is that? Twitter, chat stream on YouTube, and 2 chat streams on TikTok. Okay, what's the YouTube channel? The 10-Minute Trader. If you go up to the, what do you call it? The bio up at the top left corner, click on that. I love Apple. I do too. Okay. And to the right. All right. You likely variability in the stocks. You like variability in the stocks. Okay, whatever. YouTube, the 10-minute trader. I made $563 today. HBU. Good for you, Chris. I need this old school IML. I have no idea what that means. That's awesome. Great work, Dad. Sir Sip-a-lot. That's funny. These, okay. Gotta learn from these old schoolers. Thanks, Alex. Yeah, old school is fine. Yeah, wise. I don't like to call it wisdom. Yeah, okay. Thank you. Kansas, right. Dust in the wind. Oh, yeah, there's dust in the wind. Dust in the wind, but Kansas. Thank you. Yeah, all your money won't another minute buy. You can have billions of, you can have trillions. Warren Buffett, no, not Warren. Yeah, even he can't buy any more time. Do you execute the option calls on Friday? No, I do not. Thanks, James. We the people, back again. Cool beanies. Poseidon's last molar stock, FRT, sounds like a gas stock. We hope it doesn't move into oil, okay? Any good energy stocks? I don't isolate my stocks that way. What stocks would you recommend putting options in? Okay, I don't make any recommendations whatsoever. Can you say that again? I missed it. Dust in the Wind by Kansas. All your money won't another minute buy. I have no idea what you're talking about. Okay, this whole time I thought you were collecting the dividends. Nope. SMCI is doing good. When you go, where was that question? Damn it. All right, here we go. Cabo, 1962. SMI is doing good. When you get a chance, check it out. Nope. I've looked at SMCI many times. What I would really like you to do is actually do some research on SMCI. How many years of increased dividends has SMCI had? What is the current yield on SMCI? Once you figure that out, you'll probably run for the hills too. You got a lot of patience. Yes. Hey, Franz, how are you today, Franz? What stock should I get into right now? I can't give you that answer because I know nothing about you. Explain what is book value. Miguel Luciano. Miguel Luciano. I like that name, Luciano. Okay, so what is book value? I'm trying to think of it. How do you equate it? Net worth. Think of it this way. You're a person, right? You own some shit. You owe some money. What you own, what you owe. Once you do a balance sheet, okay, all your assets, all your liabilities. You come together, you pay off all your liabilities with your assets. That's your book value. Once all your liabilities are paid for, what do you have left? Pool is a monthly, so it won't like it. Randall Ray, okay. Not sure why Buffett bought it. Okay. The 10-minute trader. No, not. See, I've had the 10-minute trader for over 20 years. The dude, the 10-minute trade, yeah, he jumped in, he took out the R. Yeah, that's not mine. The10minutetrader.com. Yeah. I thought it was kind of cool, you know. Someone came out with a 5-minute trader. Someone came out with the 8-minute trader. Someone came out with a 10-minute trade. Some came out with a 10-minute trading. Yeah, whatever. I like MLK long term. MKL long term. Great company, great leadership. Never heard of them. Also, BSM, great dividend stock. Never heard of them either. What platform do you trade on? Think or Swim and Robinhood. Hey James, how far is your fund formation? Any good news? I have one more month to go, and that will give me one whole year of videos that support all my trading. Because I did this once. Okay, now, all my trades here are listed online. Along with this are videos of me actually doing the trades. So let's go, wait a second. Let's go here for a second. Podcast. Okay, my podcast, the Dividend Stock Talk. You can pick any one of these. There's over 900 episodes. Okay, let's play one. Because once I start blurting out the complexities of calendar spreads, put spreads, credit spreads, and other kind of option trading, it gets very confusing. So usually, now this is not always etched in stone or guaranteed or anything. Clear this, 0.11, and they get 60 cents. Basically, I'm buying back this week's, I'm selling next week's, and I want 26 cents. Okay, so I have over 900 episodes of daily podcasts. Okay, now all my trades are available to see online. Now, tonight is being recorded on YouTube. Every single one of these trades is not only online for you to see, but live video and audio to go along with it. So once I have one whole year, because years ago, let's go all the way down to the bottom, okay? Years ago, I started off sharing all my trades in August 2011. Okay, every single one of my trades was posted. Okay, July 6, 2013. There was a huge drop last few weeks. We took a break from trading and waited for the dust to settle. We didn't take any losses as this year, as we're looking to take no loss. We dropped down to only 20% return so far at halfway point of the year. Our weekly average has dropped below 1% per week, and our monthly average is now only 3.3%. What a bummer, 3.3% per month. It's very important for investors, such as you guys, when you want to take a look at a stock, to have as much detailed information as possible. So when I do my fund, you have all this information at your disposal to say, wait a minute, what is this guy doing? Well, this is what I'm doing, okay? Now, my fund won't be available till sometime next year, maybe the year after. Okay, it's supposed to be paying 20% per year. Now, that's my goal. My goal is to create a fund that will pay people 20% per year. So the stocks you look at, well, they pay 5%, 3%, 2%, 1%, something like that. Very rarely do you find a stock that pays 20% per year. Well, in order to do that, I need to get in touch with an insurance company that will insure the returns. So I need the insurance company to be able to see, check, and verify all my trades. So I have audio, I have video, and I have text with all the trades I've done. That makes it easier for me to start up the fund. So at the end of the year, I'll have a full one whole year of audio, video, everything to be checked and cross-referenced. That being said, let's continue where we were. Okay. Any good books? This is all new to me. What's a good place to start learning? Any good books? I liked Wade Cook's A Wall Street Money Machine. That was a good one. It was eye-opening. It was really crazy. I love Dory. Would you like to learn more about the tax issue at some point? Okay, a lot of people would. It's very challenging to be able to find a good tax strategist or a good tax planner. Okay, they're very challenging to find one. PLTR, hell no. Thanks, Sweetie Swag. PLTR, hell no. Is this for monthly income? No, this is for weekly income. Okay, you need a lot of capital, though, to make dividends worthwhile. Alrighty. Milf Inkin. Cool beans, creator. TY, thank you. You're welcome. How much capital do you start with? I started out with, I think, $12,000 many, many years ago. Why does Warren Buffett not like companies that pay dividend? I have no idea. That's not true. Warren Buffett actually likes Coca-Cola. They pay a dividend. Is that it? That's it? All the questions are answered. Alrighty. I am done for the night. You guys have a great night. We'll see you again tomorrow. This is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks, take you along for the ride for a safe, predictable, consistent 1% per week. And that, my friends, comes to over 50% per year. Could you do it? I don't know. Maybe. But it's there. The numbers are there. It's a numbers game. Okay? You guys have a great day. We'll talk to you again tomorrow. Out of here. done. On here with them. On here with them. What did I miss? Godric, dude, you missed everything. The night is over.